This is Freedom Investor Radio, and I'm John Pearl. It hit me like a freight train when I realized there was a better way. When I discovered that I could take my future into my own hands. When I realized I could invest my way to freedom. This is what I'm working towards. In each episode of Freedom Investor Radio, we will explore the tactics and strategies used by the top real estate investors and entrepreneurs in the nation. We will learn how you can start investing your way to freedom and take control of your life. Thanks so much for tuning in. What's going on, everybody? John Pearl here from Freedom Investor Radio. Today I'm joined by Brian Wagers. Brian, welcome to the show. How you doing today?
Hey, John. Thanks for having me.
Yeah, absolutely. So, Brian, why don't you just go ahead and tell us a little bit about yourself? Tell us about your early life. What got you into real estate investing eventually? I'll let you take it.
Yeah. So I'm Brian Wagers. I am a full-time real estate investor and commercial real estate. So more specifically, apartment real estate. I've been doing that for about 5 years now. Before that, I was just a W-2 sales employee. I went to the University of Kentucky. I'm from Cincinnati originally. So you talk about upbringing. I was born and raised in Cincinnati, Ohio. Go Bengals. So we got a big one this weekend we're excited about. But yeah, it was just me and my mom growing up. From about 0 to 18, I was in Cincinnati. My mom, she had her own headhunting business. She placed people, it was a place for businesses and employers. My grandpa, he had his own heating and air conditioning company. So I did definitely, you talk about the entrepreneurship side of things on this show a lot. And I did have some of that in the background of my upbringing. I wasn't directly involved in it, but it was definitely in the back of my head. I went to school at the University of Kentucky. I got my economics degree there. I actually went in trying to get a finance degree. I thought I was going to be a personal financial advisor for the wealthy or businesses. And I even thought I was going to be a stockbroker for a little bit. I liked the idea of Wall Street. I thought it was cool, fast paced, a lot of money growth there. I got into college. I got into some upper level accounting classes, and I couldn't really stay awake in those classes. So I pivoted to economics. I graduated there with a degree in economics and minored in psychology. But after that, I still wanted to be a personal financial advisor. I was after college, I was trying to get a job as a financial advisor. No one would really hire me. I was 22 at the time. They wanted me to have a Rolodex of people I could call on. So I found a sales job. It was an uncapped commission sales job. So it was pretty much how hard you're going to work is how much you're going to get paid. So they were a growing company, and I was commission. I was base plus commission, but the commission was uncapped. So I knew I could kind of write my own ticket. I had shadowed some people working there, and I was doing it. So I went head first into that, got a lot of good sales experience and grew a book of business of sales. So this is the logistics industry, supply chain industry, working with shippers and receivers, very fast paced, demanding job. But I was doing that sales for about 3 years, and I was maxing out my Roth IRA account. And I knew I had to do something. I built this business or book of business, and I was starting to have an income problem. So I knew I had to do something outside of the Roth. And all the research I had done and started to do was people were making money in the stock market or real estate industry. And for me, I was younger, I guess I'm still young, but I was like, okay, what's the quicker way? And I thought, stocks was a quicker way. So tried to talk to some people who were I knew of some guys who were trading, and, try to ask them for advice. And so I bought a little bit of a pharmaceutical company. And then I put for me, it was a big deal. I put $1,000, all $1,000 into GoPro. And GoPro went from like $35 to $5, and I had no control over that. And but the whole ride down, I was watching it up and down like I did have some sort of control over it. And there was this kind of aha moment that, the stocks really was, unless that's your full-time job, or, you're going to be analyzing it every day. That was not something a roller coaster ride that I wanted to get on and that I wanted to participate in. I wasn't in charge of the roller coaster, to say. And so that led me to real estate. I was like, okay, if not stocks, then what? Real estate. So, I dove into the real estate world. I think a lot of people get started at Bigger Pockets, huge platform. I think that's a lot of people's basic understanding. So for me, that's what I found. I started reading every single book Brandon Turner put out, listening to him, and it was Josh Dorkin at the time when they were first starting. Listened to every single podcast that they had, and it's like, okay, I'm going to buy a single family house a year, and I'm going to do this for 10 years, and I'm going to have 10 houses, and I'm going to really set myself apart. So I started making offers on homes. At that time, I had saved up my life savings of $25,000. I'd gotten that all saved up, and knew I could take down a single family home, and was making offers on single families. Finally got one under contract, and I marketed it. I put together a little lease package that I made and I found online, and I had marketed out on Zillow Rentals, and I had it rented out just about like 2 days after I closed. The guy actually Venmo'd me $950 on the first of the month, and my mortgage was like $400 a month. And I was doing that for about 6 months, and it's like, okay, what's the next step for me here? I'm going to save up another 20 to 25,000 in another year or so, and it was no like, oh man, the toilet broke in the middle of the night and I had to go out there and do it. The guy was a good tenant. I was lucky. I had heard of those stories, but I didn't have any bad stories. And it was just the scalability aha for me when I was looking at that. And so I was like, okay, we don't need to pivot out of real estate. We just need to make a small pivot and more focused turn. So that's when it led me to commercial. I was like, okay, what's bigger than single family? It's commercial real estate. So I was like, okay, commercial real estate. All these guys on these podcasts are saying, oh man, I wish I would have got started earlier, or I wish I wouldn't have thought I had to do so many of the smaller deals to do the bigger deals. So I was like, okay, I'm not going to be that guy that said I wish I had started earlier. And I had a strong sense of urgency from the beginning. And I started looking at multifamily deals, started underwriting them, looked at deals. Obviously, I knew LoopNet wasn't the place to find deals, but I started picking out packages from LoopNet and underwriting those, and as if I was going to make an offer on them, and putting them together, putting packages together. And then from there, eventually I found a 12 unit that was in my backyard, so I got started. This is all my real estate beginning started in my backyard. I'm here in Arkansas, Northwest Arkansas, and that all got started here. And I found a 12 unit, made sense, and did all the numbers. And I could convinced, I'd been talking about what I wanted to do I wish I was talking about it more when I first got started 5 years ago. Now I'm talking about guys like you and other people. But in the beginning, it was just, I didn't want to tell everyone what I was doing yet because I didn't have any experience in it. I didn't know if it was going to work. So I was telling my friends and family, but I had found this 12 unit, and I finally convinced my girlfriend's dad. She was my now father-in-law, but it was my girlfriend's dad at the time. And I was like, hey, I know you guys own a bunch of single family homes. They actually owned them free and clear. They were really debt averse. They went through the 2008. They had all these single family homes, but they didn't have any debt on them. And I ran them through worst case scenario, best case scenario on this 12 unit. And we got that. Finally convinced him to go ahead and invest with me on that 12 unit. And I got that one under contract. And that was great. For that first investment, it was just a promissory note. I gave him a promissory note. He was going to give me 100,000. I was going to give him 125,000 in a year or two. And I did that. And I got him out of the deal. And then I did another 12 unit. As I was doing this deal, I was still talking to brokers, my girlfriend at the time. And again, she plays a big picture in my life, and my now wife. She would drive me around, and I would write down addresses of crappy looking apartments in our neighborhood, and we'd take pictures and send addresses to there. And so we got another 12 unit and a 20 unit under contract doing that. And my father-in-law saw what I was doing, and he was like, okay, he wanted to get more into the equity side. He was like, okay, I got the promissory note, but now he's ready to get on the equity. And I was all about it. He gave me an opportunity, and so I started doing the same thing, talking to commercial brokers. Now I felt a little more confident. I had done this 12 unit, a 20 unit, a 12 unit, and they knew I was doing deals. So I started putting together a little 52 unit deals, 52 unit deal, another 79 unit deal, and 82 unit deal. And I built up a portfolio of about 450 units. And that was about a year and a half ago where I got to that 450 unit mark, just joint venturing with my father-in-law. So that was the big pivot for me from, stocks to real estate to more specifically multifamily real estate. And I think there's still continuing to be aha. I think, at the conference we just attended, me and you at Manhattan Beach at Hunter Thompson's event, there was a couple aha moments there too. I think that's part of the business, is like keep continuing to be open to having those aha moments. And then, so now at my current state, I'm focused on the larger true syndications of multifamily, so about a year ago, I knew I was going to have to look outside of my backyard. So a year ago, I was like, or maybe 2 years ago, I was starting to look at deals that I had already made offers on. And, so I'm in Northwest Arkansas. There's only so much inventory in Northwest Arkansas. So I knew I was going to have to go outside of my market. There's only so many apartments here. And I knew I wanted to stay in the apartment. I've been very hyper-focused on multifamily. There's great other aspects of commercial real estate. I think what other people are doing in the field are great. And I think it's really great, but that's not what I'm good at or focused on. And so I knew I had to go, if I wanted to stay in multifamily, I had to go bigger and I had to go out of my market. So I really started to look outside of my market. And right next door to Texas. So Texas made sense to me. Oklahoma was right above me. So that at the time, that's what I understood and that's what made sense to me. So I started looking for good operators in those states where I could bring the capital raising piece. At first, I didn't know what specific part of the multifamily I was going to focus on, but I've really been attracted to the capital raising piece of it. Now that I'm able to put my own capital into it and bringing in other people just outside of friends and family, it's part of the deal that I do really like doing. So that's where I'm at now, is focusing on the larger deals where I'm not necessarily putting together the whole thing. Like when it was just me and my father-in-law, he's doing the equity, I'm sourcing the deal, I'm putting together the lending, putting together the insurance, setting up property management, doing due diligence, physical and financial, and managing the managers and all that, talking to the vendors. Now it's more just talking to the equity side of it, just talking to the equity, just talking to the capital. Yes, financial underwriting and operator underwriting, but more of the aspect that I like doing and that I enjoy being a part of. So that's where I'm at right now. And that part of it.
That's amazing. And people out there, if you're listening, that's how you do it. So Brian, what age were you when you bought your first rental property, that single family?
So I guess I was 20, I'm 30 now. So I was 24 and a half, maybe.
That's quite impressive. So you said a lot of good things there, and I want to kind of break it down, unpack it a little bit. So started off, you were out of college, you were working a sales job. Now, having that skill set, I'm sure, played a big part in your success. How did that skill set correlate to what you were doing in real estate? And how did you kind of prioritize what to work on while you were working your W-2 job? Do you need to be a salesperson, have a sales background to be successful in real estate, multifamily real estate? What are your thoughts on some of that?
Yeah. So for me, the skills the sense of urgency is huge in the supply chain industry. It's very quick. Real estate, one of the great things about it is a slow moving, but it's not like the stock market where the boat can just 360, but being able to be quick, especially now, not even 5 years ago, but now being quick to make offers, being quick to respond. I don't like any part of the deal for it to be waiting on me. I don't mind waiting on someone else, but I don't want it to be me that someone is waiting on. So I think having that transparency is huge in that supply chain industry. So being super transparent has been super helpful. What part of the deals that we're looking at, and then the sales aspect. You don't necessarily need sales to be a multifamily investor or an operator. Just to, maybe you really like underwriting. You're a numbers guy, or you really like asset management. You're just talking to property managers, or for me, the sales aspect. I mean, when I was building the book of business, I was doing 100 cold calls a day. I was calling, supply chain places all across the country, and I was just, hey, what does your operation look like? How can we help you? So I got pretty good at that, and I'm not afraid to, make the call. So that transitioned really well into me building, the smaller portfolios where I was doing just about everything. So I was calling the local lenders, who was going to let me sell or finance a deal. Not a lot of banks will let you do that, or who is going to provide the best terms, creating lists and then taking action on those, calling brokers, now talking to investors, not necessarily calling out on investors, but, that was a huge, definitely part of my success, and being able to get a lot of rejection. It is real estate now, especially now, that you're going to get a lot of no's, especially in this market. Not every deal is going to go through what you thought it was going to go, or you think you're the best offer. I think there was that deal that Hunter brought up, like someone thought they were like looking good on a $65 million deal, and someone came in and offered 80 million. And I was like, man, I thought it was laughable. I'm like 500,000 to $1 million off on these deals, but that's a whole nother level, of that. So I think having that rejection early on in my career was good for me to not be afraid of that, and know it's just part of it. And what can you learn from each one, and what to dial in on. But you don't necessarily need that to be in the real estate field or multifamily field. You don't have to have the sales experience, but I think sales is good for life. You're selling, whether even if you're an accountant, you're selling your services, you're selling, yourself to your potential employer when you're wanting to do it with them. So I think it's an important part of life, but not necessarily everyone that's their whole thing. So I think it depends what role you want to play.
Yeah, absolutely. And, Brian mentioned syndication. For those of you listening that don't know what syndication is, that is when a number of people pool their money together to purchase a resource, a larger asset, usually like an apartment building. And in the world of syndication, it is definitely a team sport. So if you don't necessarily have that sales skill set, there's a number of other things that you can bring to the table. And the numbers and the equity piece is big enough in the large multifamily space that, it makes sense to work as a team. Now, on that note, Brian, you mentioned you're looking to partner with other people. So what do you look for in other partners, and how does networking play into what you're doing now in multifamily?
Yeah, well, thank God for the live events that are back now. It's great, like to shake someone's hand and to look them in the eyes, or to be front row, like you were talking to someone, Ken McElroy, or like having that is a lot different than you're listening to someone or talking to someone on a computer, and the dog's barking or the cat runs by or someone's pulling you from over here. So I think it's a lot more focused. You're a lot more in tune with someone. Yeah, we can still have conversations like this, virtually, but it is another thing to really speak to someone and be in person and shake their hand. So I think networking is big. Being intentional about what you want to bring to the table and what you're looking at bringing to the table is a big. For me, I didn't really know what part of the real estate I wanted. When I was just building my business, I just knew I wanted to do multifamily. So I didn't get really hung up on what aspect of it was. I just wanted to do it. So I just got deals done. But as I got bigger and I started to do more, I knew I had to fine tune that. And for me, that was again on the equity piece. So now I'm looking, you talk about who you want to partner with, so for me, I'm looking for operators that are boots on the ground or have access to boots on the ground and good markets that I like. But I'm also open. I'm learning about new markets too, like events like that. I looked at a deal in Virginia Beach, Virginia. I hadn't thought of Virginia ever of a place, but I thought it was really cool. Like I got a presentation and all the employers that are in the area and the population growth, the employer growth. So open to different markets. But some people might say, hey, I'm only looking at Texas, or even get even more specific. I only want to do deals in Dallas, Texas, so I think there's no right or wrong way to really look at that as far as more personal preference or more analytics. But for me, I'm an operator. I'm looking for the experience. And then for me, because I'm not so much on the hands-on piece of that, I want someone who has, for me specifically, I'd like someone who has construction experience, that can handle due diligence, that can handle renovations, that can handle CapEx budgets, that can meet those and not underestimate those. And someone who has experience in the asset class that we're investing in, or that's partnering with someone that has that experience, I think is important to me, and partners. And someone you trust, someone you trust that will do what they say they're going to do. Anyone can, like we heard, anyone can make numbers dance off of paper, so it's important to trust, but it's also important to verify.
Absolutely. So Brian, I'm curious, you mentioned you own a number of units on your own, and you're also involved in syndication. So what is your portfolio looking like these days? Numbers wise?
It's an interesting one. So 54 units I own 100% of, just me. I'm actually under contract to sell I'll be out of those in about 2 weeks. So I'm exiting that. And then I have 450 units that I have a joint venture with just my father-in-law and me. It's just me and him. It's like split 80-20. He's got 80% for putting up the equity. I have 20% for putting together and managing and everything. And now I've got the syndication piece. So I've done quite a few more units since doing that. So I'm looking at my numbers right here. So the past year, I've syndicated 571 units at over $50 million. And that was like my whole portfolio. It's like, okay, I was able to do my whole portfolio. Yes, I have a less piece of the pie, but I'm doing what I like. I'm putting my investors' capital into good deals, and I'm also getting in on these larger deals and getting that experience on the larger things. Right now, I'm still doing the smaller deal. I have a 20 unit under contract and a 72 unit under contract with me and my father-in-law, but I'm also raising money on a 236 unit right now that will be closing in the next couple of weeks too. So I think for me, I'll still be doing the small, medium-sized deals for the near future, but that is a means of placing that into the larger deal. So for me, there's 54 units that I'm exiting that I own my 100% of. I'm going to be holding that back and placing that in the deals that I'm raising money on throughout the year. So I'll be placing that in all the deals, the larger syndications. And that's, for me, that's my vision. That's what I ultimately want to be doing. It's just a larger, more passive syndication deals.
Yeah, love that. That's similar to my approach on this. I'm participating on the active side to generate more equity in order to place it into other syndications on the passive side. That's the beauty of this space is, you build up your network, you make some money, and you can diversify by placing it into different markets with different operators, different asset classes. And also one of the things I love about syndication, so you've got a very impressive portfolio on your own and you've got all this knowledge, but now with syndication, you can get other people, family, friends, coworkers involved in what you're doing and help them generate these great returns that syndications produce. So that's one of my favorite parts about this. I started off, kind of more for more selfish reasons and, just trying to achieve financial freedom on my own, but you learn that you can help others achieve financial freedom. So does that part of this play into what you're doing, that, the helping others get involved in what you're doing? That part of it fascinates me. So love to hear your thoughts on that.
Yeah, that's exactly. I mean, for me too, it starts as like, okay, I'm going to position myself to get financial independence, or not even, there's so many different words for financial freedom, financial independence. Some people say FU money. And it looks different to everybody, but I think you have to put on your own gas mask before you can start putting on other people's gas masks. So you have to be in a position to be that financial wherewithal before you start giving it. But I think that is in the same position where I'm at. You start bringing other people in on this ride or on this journey that you're on towards that. You start bringing in other people, and it's fun and it's cool to do that. Like, oh man, I was used to, like, some people that totally different. You start talking to all these different investors, and maybe they sold their business, or they sold a portion of their business, or maybe they're physicians, or maybe they're people that are working really hard on building their business, but they don't have time. They don't necessarily understand the multifamily, or they didn't understand before talking to guys like us, the multifamily beauty of investing in commercial real estate and multifamily. And maybe they were used to like giving hard money loans for like 10%, and that's all they got. They got a nice little return, or maybe they made 8 to 10% on the stock market throughout the 20 years that they've been invested, but they've also seen a lot of swings. So seeing like the best risk adjusted return, they can get higher returns, better risk adjusted returns. The tax benefits, especially the people that we're talking to, the tax benefit is a huge portion on their business when you're in that highest tax bracket. It's just awesome to see what you can do with those tax benefits, and then the passivity of it too. You're talking to people that are busting their butt to earn this money. They don't need to be busting their butt to make their money work for them too. And some people like building their businesses, and they maybe not like the investing side of it. So they know the who not how mentality of, okay, I can invest with this person who knows how to place this, and they're placing it themselves. Like me and you, we're actually placing our own money into this investment vehicle, so they can see that on the other token too. So I think it is a really fascinating and cool space where you are almost educating these people about it, and you're taking them in with you too.
Yeah, love it. So one thing, just to kind of pivot a little bit, financial literacy in the US, I've learned the more I get into the space, like I had to kind of discover all this stuff on my own, typical route, Rich Dad, Poor Dad, all the books, Bigger Pockets podcast, just keep diving deeper into the rabbit hole, learning about the Fed, economics. So how, you kind of mentioned your light bulb moments, just kind of paying attention to your money and what's happening with it, wanting more control. What, if anything, would you recommend other people do to start getting a better grasp on their money and, improve their spending habits, saving to invest? Is there anything that's helped you in that sense, or that you would recommend to other people?
Yeah, I think there's several things, the education thing, but as far as as strictly investing, I think tracking your net worth is probably pretty important for those that are looking to see how they're doing with their investments. I think it's important to go back and look at your investments and see how that is performing, and start doing research on other vehicles of investing that can also can beat those returns at a risk level. Obviously, there's different investment vehicles that can produce a better return, but look at what they can do as far as the passivity. How much time are you putting into it? How much tax benefits are you getting into it? I think are good areas to look at when you're looking at an investment vehicle. But I think tracking your wealth is important. Tracking your net is important too. How much are you netting? Now is a busy time for a lot of people, putting together our taxes and getting ready for. So I think that's a good time to, everyone does it at the end of the year, at the beginning of the year, but I think it should be a continual process of reevaluating where you're at, where you're going with it. Talking to other people that are investing is good too.
Great. So Brian, so this podcast, Freedom Investor Radio, a little bit of background, you kind of know this, but for those of you that don't, this is my journey. I work at a nuclear power plant that's closing down in 2025. It's my mission to replace my W-2 income with income from real estate between now and then. And the goal with this podcast is to kind of help educate other people in the same boat that are either going to be losing their job out at the power plant or just want to, gain more control and freedom over their lives. So you were able to achieve a ton of success at an early age. What do you say to people out there who maybe are having some limiting beliefs or not fully confident in themselves that they're able to achieve something like this, or maybe they're a little bit older and think it's too late to get started?
I mean, what do you have to lose? Just go and do it. I think a lot of times they're just beliefs, and that's what it is. Just skip. It can be tough to get beyond that, but taking action is a big portion of it. Obviously, you know that too. But like just going out and getting. I mean, maybe you get your teeth kicked in a little bit, but you got to get back up and keep going. Think about what's the worst thing that can happen. I think Gary Vaynerchuk's a big he's like you're in your 30s, 40s, 50s. He's like, you're just getting started. He's like, this is a long game. This is not a short game. Just think of it as a long-term game and think, you have so much time to make up. If for some reason you do fall, you have time to get back up and repivot and look at your business. So I think time is on your side for sure.
Yeah, absolutely.
And have that in the back of your mind.
Yeah. And just for me, something, just getting out of your comfort zone. I have yet to find a time where I've done something that I was uncomfortable doing and I didn't realize once I started doing it that it was okay and that I could do it. So expand your comfort zone and it eventually becomes your new comfort zone. All right. So I know you're big on fitness. How does fitness and working out and keeping a healthy body and mind contribute to what you're doing professionally with real estate?
I mean, you talk about the getting out of your comfort zone. It's plays a little bit on that too. The fitness is a discipline aspect. It's having a routine, having a schedule, and having the discipline to continue that routine and continue that schedule despite what happens. You flew in late, or you had a rough day, or maybe you didn't get the sleep that you wanted, or something happened. I think when you have that routine, it can get you through those moments of stress or doubt or backpedals. You get through that. And for me, it's an outlet too. Strength training and in cardio training, it's an outlet too. It helps relieve a lot of stress. It helps clear your mind. It helps you breathe easier. Your resting heart rate is lower. Having a resting heart rate is a real thing. You can make game time decisions a lot faster. I think the clarity that comes with it, the energy that comes with it, the longevity. We talked about the long game too. I want to be not only here for a long time, but I want to be happily here and healthy here for a long time too. So thinking about that long-term picture, it's an investment in your well-being and your way of living.
100%. What's a book that has just kind of changed your life more than any other book? Any of them stand out like that for you?
I love self-help, but I still read self-help books and self-growth books. Think and Grow Rich was a huge one. It is the compound effect is a big one too. And one I'm recently just finished reading that was gifted to us by Hunter, Who Not How, was a great one as far as delegating and partnering and working with the right people on how you can get done together.
Yeah, absolutely. And just for your awareness, Who Not How just changed my whole outlook on doing business. I was trying to do everything by myself. I read the book Who Not How, and then that's how this podcast got started. I was thinking I had to do everything myself, but that's not the case. There are better people to do certain skill sets than us.
That's right.
So, Brian, major accomplishments for 2021 that you're proud of, and what's your biggest goal for 2022?
Oh man, so 2021 was big. I got into I did 2 syndications, but I did 6 deals, and 2 of those were syndications. 4 of them were local deals, and I really raised the capital raising bar and got into these larger deals and really opened my mind on where I was going with my multifamily portfolio and where I'm going with that. 2022, I want to place as much capital as possible into commercial real estate. I would like to get another 1,000 units under management. I would like to try to do a deal a month at the end of the day. Maybe one month we don't do any deals, but maybe another month comes up and a couple of deals came through. So those are some of my goals for 2022 when it comes to real estate.
That's great, man. That's fantastic stuff. So, hey, super inspiring conversation. I love what you're doing, Brian. What's the best way that people can connect with you or find you?
Yeah, so we actually just got done wrapping up a book. So you can go to wagers.capital.com/book. And I got a lot of content on there about, just the look of stock markets versus multifamily and historical retirement vehicle, what America, what we're used to looking at for retirement vehicles compared to multifamily, with some education on that aspect. So.
That's awesome. All right, ladies and gentlemen, Brian Wagers, thanks so much for coming on, brother.
Good talking to you again, John.
All right, take care. Thank you for listening to Freedom Investor Radio. If you like what you heard, make sure to rate, review, subscribe, and share with a friend. Thanks again for listening.